Well, hello and welcome to this, the Crypto Club and Digital Assets Weekly Catch-Up on Zoom. It is 14th of May 2023 and we're going to talk about whatever the audience wants to talk about this week. Some weeks we talk about DeFi, NFTs, ICOs, STOs, the metaverse, Bitcoin Ordinals, Ethereum upgrades, all sorts of stuff really. Sessions are open to everybody, novice and expert alike, so do come along. There's a link below explaining how you can join. If you enjoy this, click on the like, click on the subscribe. Even better, come along to a future session. Anyway, let's see who's going to come and join us today. Hello, Zanita. Right, and we've got someone who's down as DSV Blockchain as well. That sounds interesting. Who's that? Saying just on text at the moment. That's fair enough. Not a problem. If you're just texting, feel free to type in anything, share any information. Down from Africa today. Okay, so DSV is a blockchain we are setting up with asset-backed physical coin, stable coin. So that's interesting because that's almost the reverse of normal, where you have asset-backed, a virtual thing, but with a physical asset. You're actually using a physical coin, but you're describing it as a stable coin. It's interesting. Coin is made of 999 gold and silver. So that sounds rather high because I thought most gold coins were slightly lower in purity than that. With natural diamond integrated, it sounds seriously expensive. You sure you don't want to come on to audio and tell us more about it? It sounds really interesting. Launching on the 15th of July. You got a website or a link you can share? And Zanita, maybe as DSV's typing in some stuff, you might want to share a little bit about where you're from and what your interest is in crypto and that kind of stuff. And DSV says that they're down in Africa to negotiate the diamond contract. So I thought you'd be actually, I guess Joburg, is it, where De Beers are based? Is that who you're working with, or are you working directly with miners? We work directly with mining companies. Okay, that's interesting because I don't know much in the diamond space, but I thought that all the miners were linked in with the downstream suppliers, the likes of the De Beers and that. I thought were a big player in that space. I didn't think they did any direct. And interesting news in the diamond space and blockchain space as well is Everledger, who are originally a UK company who do diamond provenance and traceability on a blockchain. I always describe them as the poster child. They filed for bankruptcy at the end of March. Yeah, it was the 31st of March. They filed for Chapter 11 as they were going through a funding round and don't think they made it. So as you say, yeah, they're shutting down or potentially shutting down because they're going through a bankruptcy filing at the moment. I believe the team was made redundant, which is a shame. Some good people working in that company. So Zanita, which country are you in? Manchester. That's an interesting country. Down the road from the Eurovision Song Contest, which was hosted in Liverpool, I believe. So what's the interest, Zanita? Are you interested in crypto or blockchain, or are you working on some project? Hey, Scott, Pedro's joined us. Hi, Pedro. And Pedro has gone. And I can see Leanne is joining at the moment. Hey, she's waving. So this is a start. We've got a mixture of people tonight where some people are on video but no audio. Some people are on audio with no video. Zanita saying that they are an independent Forex trader but on FXCM platform, so keeping an eye on crypto. It's interesting. It's fascinating how many companies are kind of like moving from the pure play, either Forex or share trading platforms onto a crypto offering. It seems to be a real great. And we've got Elena joining us as well. So Leanne, before you got camera shy, tell us a bit more who you are and where you're from.
Hi, I'm in Yorkshire and East Yorkshire, and I'm just kind of like a hobbyist really. Kind of like long-term sick, so I'm kind of like reskilling myself up.
Okay.
That's Web3,
Okay. Well, there's lots and lots to learn, and the more you get into this space, the more interesting it gets, but also the more you realise there's even more to learn as well. So that's good. But are you focusing on the Web3 side of things, or the crypto side of things, or all of it?
All of it really. Spent the last couple of years learning around crypto. I'm working on catching up with AI this year. But yeah, Web3 really interests me.
Okay, cool. And it's interesting, as you say, with the AI piece as well. There's a lot of companies that are blending across both crypto, Web3, AI, metaverse, and any other fancy names type things. We look at like, I think there's 5 big AI crypto token projects at the moment. Names of which escape me at the moment. I think Fetch.ai, Singularity.net. I can't remember the others, but there's lots going on. So, hey, Alina's joined us. Hey, good evening.
Yeah. Hello.
So Alina's always good because she always comes onto the camera and is always open to speak as well, which is fantastic. That's good. Okay, so number of new faces and names here this evening, which is great. The way we run these sessions is going to be a little bit interesting with some of you unable to use microphones, but typing in and that. But these sessions are really open to everybody, whether you're a novice or an expert. So if you're working in a particular area or you want to talk about a particular project, you're more than welcome to. Equally, if you're a beginner and you've got really basic questions, and to be honest, the more basic, the better. Because I find there's some of the more interesting questions that get asked because it forces me to rethink on things. And sometimes it might be we'll share it out to the audience as well, because sometimes people who are on this call know these topics better than me. So I was going to quickly ask, Leanne, I don't know, with you coming along today, anything in particular you're interested in or you'd like to learn more about, or anything we can help with?
My particular interest at the moment is the issues that are cropping up with AI and people saying you need to sort of slow down. I see blockchain as perhaps the ideal sort of like way to mediate.
Okay.
So that's kind of like where I'm at the moment, is kind of like looking out for crossover.
Well, certainly you take a look at how everyone got caught in the ChatGPT, and everything was ChatGPT, and now it's GPT-4 and those other things. But what I've discovered, the biggest problem at the moment is that a lot of people are beginning to use AI and the tools that are available without actually understanding how they work, and therefore what the output is that they're getting and what it actually means. So an interesting space, definitely. Sorry, you've just been joined by a couple more people. So hello, Marcus. Is Marcus going to come off mute?
Hey, yeah, how's it going?
Hey, it's good. What brings you along today, Marcus?
Yeah, I work on a lot of open source. I maintain a lot of open source, hack on a lot of open source projects that are important to computing, but also this space, this industry. And I've been going back and forth and discussing some opportunities with Tony Perkins, the person behind Kryptonite Ventures here in the Bay Area. Red Herring, the person who started the Red Herring and wrote the internet bubble. And I think like what brought me on today was I'm trying to discuss with as many people as possible Bitcoin Ordinals and Lightning for corporations.
Okay.
I think those are two really important developments and changes happening in the Bitcoin ecosystem and crypto ecosystem broadly, and they have tremendous implications for national security and corporate finance and personal finance, and also records.
Okay, so it's kind of interesting. You mentioned Lightning, which is a layer 2 network that works with Bitcoin. But why do you think there's a particular impact with corporates on that? You think because it makes it more easily usable for them as a means of payment?
Yeah, they need a reliable, low cost, and fast payment network and payment rails, right? And so Bitcoin it is great, but it has a lot of market dynamics that can change throughput, latency, cost of goods sold, or cost of goods transferred, right? And so this is why Lightning is important. There's, I think MicroStrategy is kind of leading the evangelism effort and the advocacy effort here in the United States with respect to Lightning for corporations, but also Square, Block is also working on it. and Lightning Labs, of course. And I think that the ordinals are going to push people who are serious about potentially using Bitcoin to take a look at Lightning.
Yeah. How well do you understand Bitcoin Ordinals? Well enough to explain it to people?
Yeah, for sure, definitely.
Okay, so I'm going to put you on the spot here because we were talking about Ordinals last week, and it's not a space I'm particularly into. My understanding is that Ordinals is simply that at the end of a transaction, you've got a bit of space that you can use, and you can use that as a reference, and it's done at a Satoshi level, so it's a 100 millionth of a Bitcoin level. But I didn't really go into it any further. And I know Elena is going to be the person that if I don't ask the question, she's going to ask it of, can you explain Bitcoin Ordinals? So from your understanding, Marcus, go for it. Tell us more.
Yeah, I mean, what I would say about Ordinals, like the best way I would explain it would be it's a way to serialize data on the Bitcoin network. You can think of on the Bitcoin blockchain, which is decentralized and robust. So like if you need some data to be available under the most adverse realities, or like you can't lose this, then the Bitcoin network might be a good storage mechanism. Or the Bitcoin blockchain might be a good storage mechanism. So
the way I've described it previously, I think we used the phrase linked list last week. So it's effectively a list of reference points pointing to other things, but it's in an immutable form. Is that a reasonable description?
Yeah, I would say it is reasonable.
Cool. So just been joined by JT as well. Fernando, hi there.
There is a phenomenon where the immutability could be challenged, right? So if there is a phenomenon called a reorg that happens in blockchains periodically, and so if a reorg happens and you are trying to inscribe a block or make a transaction, it may be some time. I don't know if the data should not change, but maybe their location changes. So I guess the data that you look to put on the blockchain will never change, but maybe the location, like the reference, points to a different reference.
So that's kind of like
points to a different location.
So that's kind of like IPFS being referenced by a smart contract, isn't it? That the address will be the same, but what is on the end of the address might change.
But for IPFS, you can, like, depending on, like, a lot of things on IPFS aren't really on chain. They're like pointing to something. It's like a shallow copy, if you will.
Okay.
Like of data, whereas there hasn't been a development that I've seen in Bitcoin where people are referencing like cloud storage buckets from within.
I've done that.
Oh, you have? Okay.
Yeah, we did that as a bit of fun a while ago. The insurance industry, and we actually used Bitcoin effectively as an immutable directory to other data.
Oh.
And the ultimate thing is that a URI, so as most people know, like a website address, which is URL, a uniform resource locator. But ultimately, what that points to can be like a location on IPFS, or it could be a file share, or it could be a local thing, or wherever. So we actually did it. I think we had it pointing. We used some things where we used Bitcoin blockchain with just some hyperlinks to somewhere on AWS. I think it was. Yeah. So yeah, that stuff exists, but you get the problem, and this is what I get frustrated about with things like NFTs, which use references to objects and that the content of an object or what to the destination point of an object can kind of change potentially. And so you might think that you're pointing at something and then something has changed. And that's where you're absolutely right, that the immutability aspect is that the immutable part is that the hyperlink or the URL or whatever you want to describe it as, that is immutable. But what is at the end of it, what it's pointing to might change. And this is where I've been looking at doing things like having embedded in such a way that you can prove that the end object is also the thing that you're referencing, that kind of.
Yeah, but in many cases, the bytes, like in the ordinals that are worth investigating, or like, I'm not telling anyone to invest in them, but like the ordinals that are really interesting are the ones that include bytes in the Genesis transactions. So then you can go to the transaction hash on the blockchain in a block explorer or using CLI. And you can see this data rendered, whether, maybe it's some code, maybe it's PNG, maybe it's text, or, it could be any number of things. And that data can't change. That data is not going anywhere. That's there permanently.
Okay.
And those are the ordinals that matter, like, to me, like the ones where the data is on chain. It's not pointing somewhere else. It's just there, and it's a part of the transaction.
And sorry.
Go for it, Liam.
You mentioned, so that was the description of the ordinals that include bytes.
Yeah.
Does it mean that there are two types of ordinals, with bytes and without?
Oh, well, so they'll all have bytes, but I'm saying is like, are these bytes just a reference to data stored somewhere else? Right.
Okay.
So it's like, because for an ordinal to be at all, it has to, you need some extra data included in a transaction than the minimum amount of data. If that data is actually in and of itself representative of something, whether that be a picture, some text, or some audio, or that would be category 1. Category 2 would be if that data is just a URI that points to another location that's more capable, that has a larger storage capacity. The reason why the difference between 1 and 2 is so important is, number 1 isn't going anywhere. Like Bitcoin blockchain as a storage mechanism, unless something really strange happens, I don't think it's going anywhere. And then the category 2 ordinals, if they point to, let's say, some startup that's doing file hosting, let's say Dropbox. I'm not trying to pick on Dropbox. I think it's a good company. But like, if Dropbox gets bought by Oracle and Oracle turns off Dropbox, that reference to this Dropbox location is worth nothing.
Exactly. That's something I keep trying to emphasize, that in this whole crypto ecosystem, there are multiple points of failure, or multiple points of possible failure. And you're absolutely right. If a platform provider goes offline, so you see that at the moment with NFTs, particularly the ones that are platform specific. So for anyone who's into buying like artwork with things like Rarible and OpenSeas and that, if their platforms go offline, then you're a little bit stuck. Marcus, thanks very much for sharing that. It's really interesting stuff. And JT, Fernando, I see you've put a load of links in.
Yeah.
Do you want to tell us a bit more?
Relevant to what you guys are talking about, all the stuff happening on the Bitcoin chain.
So here we go. Here's Stacks, to begin with.
Stacks, yeah. Both of them that I posted, they are layer 2s, really. They are. You have the ability to have smart contracts attached to Bitcoin.
Okay.
Chain. A bit different. So RSK. This is, people calling now this type of integration, like Stacks, they call it a Remora chain. I don't know if you ever heard of that. So there's always a term side chain and Remora chain.
Okay.
And the remora chain is like the fish, the fish that attaches to other fish, so to a much bigger fish. So you will see that on stacks, the integrations are about 12 of them, which also has ordinals, by the way, integration is with ordinals as well. But they're very different, RSK, I think was first. Yes, it was first.
I was going to say, RSK's been around for a while, hasn't it?
Yeah, 2016, if I'm not mistaken. Yeah.
Okay.
And it's a side chain, so you still don't need any other token. It's still the Bitcoin. Yeah. So you can build stuff on the smart contracts that they provide. But with stacks is different, Stacks, they have their own token. It's sort of an oracle, really, into the Bitcoin blockchain. So what that means, it's quite distinguishable, the transactions. It means at any point, if Bitcoin miners want to stop stacks, they'll stop stacks, because stacks is using the consensus mechanism from the Bitcoin chain, yeah? But they have their own token. So they have two different options out there. There's a lot of people talking about stacks at the moment,
Okay.
Yeah, sorry.
So, I was going to say, so with stacks, the token they're using is SBTC. Is that right?
No. It's STX, if I'm not mistaken.
Okay.
Yeah.
Because I've got a site up here where they're talking about SBTC, but you're saying that's different again.
Yeah, it's STX, they're trying to do all sorts of things, which is great, We need to understand a little bit more where they go in the roadmaps, of course, but they kind of developed the platform more.
Okay.
Yeah, but in essence, there's a lot of stuff that is not there yet. Yeah. It's interesting, but what's happening with ordinals and with all of this stuff that is happening with smart contracts, on Bitcoin blockchain, what is happening is a lot more transactions. So last week I was trying to do a transaction and they showed me like $32. I'm like, what? It defeats the purpose of what blockchain was created. Or Bitcoin was created for. So if we get into the next cycle, if these things continue, we're gonna see, transactions to cost hundreds of dollars on the Bitcoin blockchain, which is ridiculous, So also what this has created is because, all the hash power, let me rephrase this. Because of all of these transactions, what we're looking at now, and I know it's going to be a reset, obviously there's always a reset of this because of the algorithm, but instead of late April, beginning of May for the next halving, is looking now at 7th of April. So we will see more towards, the Bitcoin algorithm always, resets, basically, the difficulty, etc., goes back to be at the same time, more or less the same time. Yeah, but if it continues like this, towards February, we will see the exact date of the halving. It could be even late March, yeah?
Okay.
But I'm quite worried that, transactions costs are going to increase dramatically with all of this stuff people are attaching to the Bitcoin blockchain, because it was not created for that. It's money, that's it, nothing else. There's plenty of more efficient chains to actually build stuff on it with smart contracts,
Yeah. Well, I noticed the transaction costs on Bitcoin, exactly as you say, absolutely rocketed recently, and a lot of that was put down to Bitcoin Ordinals. That is, the sheer transaction volumes have gone up significantly, but the actual volume and value, the actual value of transactions has not gone up. Yeah,
pretty much.
Exactly. Okay, and it's interesting. DSV, who's on the call as well, is saying that they're building on BSV, which is it depends which way around you want to describe it, but it's a fork of the Bitcoin blockchain, which has been redesigned in some ways, or has kept to an original design, I think. So DSV, why are you building on BSV? Because that's very much, is that N-Chain who developed that? It's much smaller. Is that right? And DSV is just typing. So 4 gigabyte blockchain, 50,000 transactions. So that's what, 50,000 transactions per block, I guess, as opposed to Bitcoin, which is typically about 2,500 transactions. 50,000 TPS, so 50,000 transactions a second. Okay, which is potentially.
The question there is how decentralized it is, because the more decentralized, and that's the problem, I think.
Yeah,
because it's vulnerable to 51% attacks, right?
Exactly. Yeah, and I seem to remember a problem with BSV a while ago. Is someone took a look at the transaction volume, and it looked like it was being reasonably well used, but when you actually dug down into it, I seem to recall it was BSV that the majority of transactions were actually a weather monitoring service that was simply using BSV, a bit like Bitcoin Ordinals, really. And so it appeared that it was having high volume transactions, but it wasn't. It was just that it was using, so some company was using it as a data store, in effect, if I remember correctly. Yeah, interesting stuff then.
So if transaction fees on Bitcoin blockchain continue to soar, what consequences will that bring to the users? Does it mean that people with small amounts of Bitcoin will stop using it?
I would imagine so. I mean, it does come down to simple economics of operation. And I've already heard it, and Ethereum are having a similar problem at the moment with gas fees, that, whereas some people originally might have tried to trade in like $20, well, if your transaction fee is $30, then it means it's higher than the cost of the value type thing. And this is why things like layer 2 solutions being looked at, because they're faster and cheaper. And it's why other blockchain solutions have been considered. You take a look at, BSV's been mentioned there. There's also Bitcoin Cash, or other crypto tokens or cryptocurrencies like Litecoin, for example. All of the other ones are faster, quicker, cheaper, usually. Bitcoin seems to just remain popular simply because it's the original one and it is so popular. And the DSV is saying, I think we have to choose well at this moment. The wrong blockchain can be the end of the project. Yep. Took 3 years just to choose the right coin. So having been involved in some of this stuff, I actually discovered that the thing that tended to kill projects off early was not about choosing the right blockchain. It was about not choosing a blockchain. I was involved in one project where we spent so long trying to decide what to do when we should have just got on with doing it, and kind of like change from there to a valid thing. Okay, so some interesting stuff there. I'm just trying to find some of the data at the moment on transaction costs at the moment, because I was looking at some stuff earlier on. But has anyone got anything else they'd like to share at the moment before?
Well, the Ethereum network as well. What a great thing that has happened this week, right? Stopped twice. The beacon change problem. Oh my God.
It didn't actually stop, did it? It just ran very slowly.
Yeah, you know what I mean? Finality,
Yeah.
Which is what it matters anyway,
Yeah, absolutely on that. Yeah, it's kind of a shame because that's all started happening since the last upgrade as well, hasn't it? So I know
I've been warning people, and it's not going to end. I don't have any Ethereum since 2021. Okay, that's personally, in my view.
Yeah, but they've put a patch in to solve the current problem, haven't they? I thought I saw something. Well, yeah.
I don't know. I have a specific view about that. You and I discussed that. I just think both Bitcoin blockchain, and the Ethereum blockchain, and for me, it's just like, yeah, great. That's what got us into these. But they are prehistoric. They're the first ones. Tech evolves. And people, and what they've done is hybrid stuff. And you and I have been in technology for a while, and probably many people here, you know, we know that any hybrid stuff doesn't work eventually, you know, it's just patching stuff, you know.
Hybrid is always a compromise in some way.
Yeah, exactly.
Definitely. Yeah. I've just took out, here's the Bitcoin average transaction fees. So this is how much per transaction. And a few days ago, about a week ago, kind of hit $30 per transaction. I think I'm reading that right.
I got a quote for 32 when I was trying to do one. I was like, what? I didn't do it, of course, you know.
Yeah, well, we can see, there you go, peaked in here, according to this one, it says just over $30. Whereas, you know, previously it'd be, you know, $1 or less, sometimes around $1 or so. But certainly it spiked up here and it was put down to, as you're saying about, you know, Bitcoin Ordinals, a very high volume of transactions going through, the miners not being scaled up to be able to deal with it. And so the fees just went up. But it's kind of interesting. It's a bit like, for those who are familiar with Uber surge pricing, for anyone who uses an Uber cab, Uber prices go up when there's demand type thing. So in a way, this kind of shows what happens when there's a sudden spike in demand. That laws of economics say that when there's a high demand and low supply, price goes up, and then it's settled down, it's dropped back down, so it's about $5 at the moment. So coming back to Elena's point, the price, the cost of a transaction does have a bearing on the use of Bitcoin or any other crypto, because obviously the more expensive it is to transact, the less likely it is that you are to use it. For low value transactions, you know, if you're transferring 10 Bitcoin, which at the current price would be what, $280,000, you know, $280,000 to transfer it for $30 is still pretty insignificant. Whereas if you're trying to do microtransactions, or you bought $20 of Bitcoin, to, as I said before, to pay $30 to cash in or whatever makes it uneconomical.
Even with those large amounts, you know, you can send, I mean, it costs what, 4 to 12 British pounds to actually send a transaction to another bank of 100, 200K. Even that is cheaper. So it really defeats the purpose of what it was created for, you know. And Ethereum is going to be the same way, because look what Pepe, and there was only a couple of meme coins that were like pushing Ethereum again really high. I mean, that was just a couple of projects. Imagine how Ethereum is going to be, when we go to the next cycle with thousands of projects, you know. Transactions will go back again to hundreds of dollars, you know. So they didn't solve any of the problems.
Well, I think you hit on it before, really, particularly Ethereum. It's kind of a victim of its own success. That the more capabilities it introduces, the more it'll be used. The more it'll be used, the more expensive it becomes to use. And that's where it's interesting. DSV's put a comment in the chat saying, per bitcoincharts.com, BSV transaction fees spiked recently, but remain relatively low at an average price of just under 4 cents. Meanwhile, average Bitcoin fees hit 31.91. Yeah, as everyone's piling into BRC20 tokens. So BRC20 is the latest token type, which links in with ordinals exactly. So,
but you know, I don't think the even BSV has solved this problem, because if they get like the same amount of miners, same totally decentralized, and the same amount of transactions, I'm pretty sure the cost is going to be as high as Bitcoin fees.
Yep.
Because algorithms is pretty much the same, you know. So all of these chains out there, you know, like I said, the generation 1 chains, you know, there's plenty of others that have actually evolved, created something much better. And people should really, in my opinion, people should really stop at these, because they are just like, I call them geriatric chains, you know, that's what they are.
Well, I describe the whole space is still in an experimental phase. And that's where I sometimes argue that Bitcoin is just a big experiment in decentralized payments, and Ethereum is a big experiment in computing done in a different way.
Remember, DeFi, decentralized finance, majority of it runs on Ethereum.
Yep.
Yeah, and that's a problem. It's because you never be able to actually have, well, first of all, you can't really have proper centralization, and it seems that everybody starts to forget about the censorship, on Ethereum.
Yeah.
Because it is there. They have to, because of the US laws, yeah? So 60% of the transactions, we reach 72 at some point, are censored, and they can stop anytime. They can stop your money, anytime they want. Yeah? Certainly, that's not decentralization, and it causes a lot of problems in the future, in my opinion.
Well, that's certainly something I know that a lot of people don't realize about things like NFTs. If they're based on the Ethereum platform, that there is that potential of whether it's certain addresses or wallets or whatever being blacklisted in some way or seized or frozen. That you're right that everyone keeps talking about how it is that crypto is decentralized and therefore escapes the rules and regulations of the world. That doesn't really work, unfortunately. So, and we've just been joined by Miss Green Jeans as well. Hello. You're going to say hi. She's now scrabbling for the mute button, and she's going to press the on-camera button by mistake.
Hello. How is everybody?
Hey, we're good. How's your world of research of crypto?
It's going really well right now, thank you. I'm just looking into DCG and the payment plans of last week and how they missed their payments. So I'm just going through that at the moment.
Care to share a bit more around that? That sounds very intriguing.
Well, there's so much to unpack with that. It's just interesting to see how the market reacted. Well, I don't think the market really absorbed that last week, but it's just watching the ongoing events as to how DCG and Gemini and 3 hours, how all that will unravel over the next couple of weeks, along with Mt. Gox, filtering itself in there. That's one of the latest things I'm looking at, along with just looking at MiCA rules and custodian regulation around the new rules that they issued last week. So not really much to report back, but
let's pick it up. Okay, so two quick things. First of all, I was going to offer for anyone who's not quite sure, DCG is Digital Currency Group.
Capital Group, yes.
Digital Capital Group, yeah. And that's one of the many cases of, as you mentioned, 3 arrows and that kind of stuff, of the kind of like companies that are folding and that kind of thing. Is that right?
That's correct. Well, they haven't folded. They're in, they're avoiding in bankruptcy.
So are they in Chapter 11?
Officially, no. They're trying to avoid it. They're negotiating out of Chapter 11. However, they haven't made any attempt to make payment on the money, their first loans with the Gemini Earn account at the moment. Gemini Earn was due a loan payment, and they've missed that last week.
So that could be interesting. Okay, thanks. And then the second
By
thing...
the way, you're sorry to interrupt. You're right. It's digital, so a small correction, okay? It's Digital Currency Group, okay? There
we go. Got that one. And the second thing you mentioned was something about regulation around custody.
Correct.
Which was... okay, right. So for those who aren't aware, in Europe, there's a thing called MiCA, which is the marketing crypto assets. Right. And that's got loads of stuff around. Well, it still incorporates the FATF travel rule, doesn't it?
It does, absolutely.
Yeah. So for those who don't know what that is, that's with any crypto transfer, you have to record the source of where the crypto's come from and the destination, so where it's gone to. So effectively, you're almost creating a ledger of all transactions. What was the specific thing around custody, though? Because custody always sets off little bells in my head.
Well, they have to get a license. Most custodians have to get a license, but they're trying to define the asset group, and they have yet to make a clear distinction as if which asset. the rules and regulations in Europe, according to the asset groups, are murky at best. So they're trying to develop a new asset group for this line of custody. And I think that's where the legal terminology is going to get a bit muddled, because for a certain type of assets, for equity assets, you have one type of regulation. So they're trying to put crypto into a different asset class.
Okay. So they're trying to create an asset class in effect on that. Okay, that's interesting. And the other thing around the custodial thing, so this is another of those confusing things that I think in MiCA, there are things called VASPs, which is virtual asset service providers. So it's any company dealing in crypto assets in some way. Whereas I think it's in the UK, they're called CASPs, which is something like counterparty asset service providers. They're synonymous pretty much with each other. There's a little nuanced difference between the two, but yeah, interesting stuff then. Thanks for sharing. So MiCA's just become approved, hasn't it? Which means that governments now have, is it 2 years to roll that out in their countries?
The first part of the MiCA rules and regulations have become approved, and yes, it's governed by state legislation. So each country will adopt their own rules. However, the new law that they wrote last week, it's going for approval, I believe, over the next couple of weeks, and that's what I'm just looking into. I haven't, as you can tell, I haven't explored it much, but I wanted to sit down and see what guidelines they're proposing, because I don't think it's advantageous for the industry, the new rules that they've proposed over custody.
Okay, because it's interesting. This is the bizarre thing. You start getting into crypto and you start learning about EU regulations and the difference between a directive and a regulation. And I think MiCA's a regulation, isn't it? Which means
is a regulation, but it also has it's a sweeping regulation, but it's only applied at state level. So everybody has a different legislation at their own state level that they can adopt.
Okay. But it does mean it gives them time now that each country has to incorporate or introduce its own laws or its own legislation to reflect MiCA.
That's right.
With the exception of the UK, of course, because we're no longer in the EU.
That's right. And FCA has their own governing. FCA is working tirelessly trying to get something pushed through, aren't they? So that'll be interesting. That will be really interesting. Yeah, I was at a meetup in London about a week and a half ago, exploring those topics as well. That was really interesting. Yeah, so that's it for me. Nothing really interesting. But I saw somebody pop up with DSV. Who popped in with DSV?
Yeah, so we've got someone who's called DSV Blockchain.
Okay.
Who I think is a little bit tired and has been to Africa or something. I think they were saying before. But they were just in the chat. In fact, they're saying that obviously MiCA is very important because they want to do the KYC, AML, unlicensed Europe. Because this thing that in the UK, at least for crypto, the reason that the FCA are mandating that crypto companies go onto the crypto asset register is because the FCA has responsibility for the supervision of anti-money laundering in the UK, whereas in Europe, I'm not sure who's responsible for that, but it fits across the whole EU domain. So Marcus is saying he can't find any news of the default. What do you mean in terms of the default, Marcus?
No, I think he's talking about the news regarding DCG and the loan structure in the US. Well, you wouldn't do, because that information comes from people that I source in the US. It's not, well, it's on the news streams out there, but I don't know why you can't see it over here.
Okay, so Marcus should be the man to ask then, because he's in the Bay Area in California.
Oh, he should know then. It'll be out there.
Yeah, Marcus, you should be telling us.
Yeah, Marcus.
That's putting him on the spot. It's the first time. It's the first time he's been on one of the calls, and he was kind enough to share some things before. Okay, well, that's interesting. Lots of regulation going on in the crypto space. We've also got, for anyone else who's in the UK, the Financial Services and Markets Bill is going through its final committee phases at the moment. that's probably the biggest wide sweeping financial services regulation in the UK for 30 years, because it includes a whole load of stuff about director responsibilities, company structures, ultimate beneficial organizations, but there's a massive amount of stuff about crypto in there as well. So it's going to be interesting to see when that gets enacted. So interesting stuff, interesting times.
I want to just mention something about MiCA, okay?
Yeah.
MiCA was created to harmonize really all the rules across the entire European Union, because before, each country was doing whatever they wanted, yeah? So, and it was costly for every single company that wanted to operate in several countries. So what that means is really being approved in April 20th of April, whatever it was, and it's going to actually be effective in law in July, yeah?
Mm-hmm.
And then we have like 18 months period, What that means is that pretty much all the rules that they've defined on MiCA is across the entire European Union, yeah? It's the harmonization of all of those rules so that companies don't need to struggle and go to each country. The rules are different in every country, So that's why it was created. And this is quite important for everyone to understand. Yeah, it applies to all the 27 member states. Yeah. So once you got the license for one country, means you can operate. It's like a passport. You can operate on every other country. Yeah, because all the rules are the same across all the other countries. So that's what I wanted to say about MiCA, which is quite important. Otherwise it wouldn't work. If every country was implementing their own rules. Yeah.
Having done enough stuff in the traditional financial services sector, where you think everything is under European rules, and then you discover that each country still has its own additional ones as well. It's kind of the other thing.
That's why they harmonize it. This was done. This took quite a few years. I remember when Dimitris Sarakis and the well-known vice president of the European Union that then got into problems with the law, they were going on same conference that we used to go, and they've been working on it since 2018. So it took them 5 years, to get to the point where they had agreement and everything is harmonized. Of course, you just can't have different rules. Otherwise, it's going to be the same problem. That's why they took so long to do it. Yeah.
Yeah. The other thing to throw in for everyone as well is that MiCA is obviously specifically crypto assets across Europe. There is some other legislation that's just gone into play in Europe as well. There's a thing called DORA, which is the Digital Operations Resilience Act, which ties in with the whole way about how companies operate computer systems, how they handle incidents and failures, which links in some way with crypto about how do you manage if you've got an exchange hack or something like that to an organization operating within Europe. So DORA has just become law in
it's all about operational risk for all, but that's across the entire financial.
Exactly. And there's also, there's a couple of others as well. There's the Digital Markets Act, which has been enacted as well, which is to do with competitive things. And then there's Digital Services Act, which relates specifically about online marketing and online services and that, which again, potentially, Leanne was mentioning earlier on about things like Web3. Well, if you're delivering Web3 based services through a website, which is then linking in with financial services, then again, there's this other legislation, things like the DMA and DSA, that people might not realize affects crypto and that kind of thing as well. So yeah, loads of legislation, loads of regulations. Could be worse. We could be in the US, as Marcus has, where you got 13 federal regulators all fighting over who rules crypto, and you've got all the state regulators at the moment as well. So I noticed New York put in some new crypto-related regulation the other day. Florida's done the same. California did something. South Georgia, did somewhere. And it was about.
Well, you saw what happened. You saw what happened in Miami, right? In Miami, not in Miami, in Florida.
I was going to say,
they signed into law.
Is this the one where they signed into the law that you can't have a central bank digital currency?
Yeah, they will never implement in Florida the CBDC if the US decides to have, and that's going to be very interesting to watch.
Yeah, I guess is it Ron DeSantis who's Florida?
Yeah.
So he's, it's amazing how you get to learn these names of US politicians. And Marcus, I feel for you because you're living in a country which is, what was it, for the free and the brave, and it's probably the most regulated place going at the moment.
Yeah, but I think regulations would be good. They could be good if they were in tune with the realities and like addressing the challenges. I think we have a lot of improving to do. We're behind the rest of the world.
Yeah. I think it's interesting that I get the sense at the moment that the US is having a battle between the regulators over who gets to regulate. And then once they've sorted that, because I'm beginning to see a bit of a bun fight between the SEC and the CFTC at the moment. So.
Yeah, it's interesting. The U.S. Chamber of Commerce, they wrote a letter to the SEC about some of their actions toward crypto. So I think things are going to improve. It just takes time.
Did they just write was it them who wrote the amicus brief on the Coinbase filing? Yeah. So for those who don't know, if you've got a court action in the US, you can file what's called an amicus brief, which my understanding is it's kind of an interested party type thing that you're attaching yourself to the action. And so Coinbase have got an action against the SEC to provide regulatory clarity. They're basically saying, what we're trying to run a business here, we want to be legitimate. And we just don't think that you're being clear enough on the regulation on what we can and can't do. So they've actually, so they've filed against Coinbase, and now, as Marcus says, the Chamber of Commerce, which is a highly credible organisation, my understanding as well, it's a representation of traditional companies. It's not just the crypto companies; it's traditional ones as well. And they're saying, look, the regulator needs to start making things clearer in order to enable businesses to transact legally and be an initiative. Probably a great one.
On that note, just very quickly, I know you need to close the call. It's past the time. I was in Dubai this last week, and I was at the there was a big conference, Dubai Financial Summit, whatever it's called, I can't remember. Mm-hmm. And Brian Armstrong was speaking there. So he came to Dubai. Okay. So he's looking for a new home. It's going to be very interesting what's happening, Very, very interesting, because the word around was that he was considering Dubai and Abu Dhabi, and that's why I accepted to come here, to come to Dubai, Watch this space. I think it's going to be very interesting, because if they exit the US, I think crypto is dead in the US,
And Brian Armstrong's the CEO of Coinbase, isn't he?
Yeah.
Yeah. Just for clarity on anyone who doesn't know the names, that's good to go. Right. Thanks for sharing that, guys and gals, and whatever other things we have these days. My apologies, we're going to have to close the call off for today. But thanks a lot for coming along. Hope you found it interesting. Hope we were able to answer a few questions and we pose a few more for you as well. Hope to see you again. Have a great day.
Thank you. Bye.
Bye now.
Bye.